Okay, and we are live. Welcome, everybody. I'm Jamie Parrott, Vice President and Chief Operating Officer at MedResults Network, and I am delighted to welcome you to our 2021 MedResults Educational Webinar Series. First, I just want to say Happy New Year to everyone and congrats on getting through 2020, which for us, it's been probably one of the toughest years on record. And as we've been hearing from many of our members, certainly they share the same sentiment, but I think we can all agree that we're excited to be moving forward. So going back to 2020, after the pandemic caused a nearly nationwide shutdown in March last year, the federal government began to develop assistance programs like the Paycheck Protection Program, or better known as the PPP. And only then, I think, our members started to take note of the opportunities presented by the Small Business Administration. Fortunately, the PPP was successful and it helped thousands of businesses remain afloat during closures and times of decreased demand. So now that we're in 2021 and many of these hardships have still continued, along with second and third rounds of closures, it's happening in my state and many others right now. The SBA has introduced and will introduce new opportunities for funding that can continue to help small businesses survive and hopefully thrive long term. Here today to speak with you is Steve Rabinovici, Chairman of SBA Loan Group, one of the largest packagers of small business loans in the U.S., and also a partner to MedResults Network. And today, Steve will be explaining how to strategically use SBA loans to start or to grow your business. And he's also going to be explaining which opportunities are or will be available to you soon, including the second round of PPP funding, the SBA 7A loan guidelines, and other types of loans. Before we begin, I want to encourage you to ask your questions via our live chat feature during or after the presentation, and one of our speakers or myself will be available to answer your questions at any time. So without further ado, I would like to introduce you to Steve of SBA Loan Group.
Thank you. Thank you, Jamie. And I want to echo what Jamie said. 2020 was a very challenging year for all of us, and thank God it's over, and we look to the opportunities of 2021. So what I want to try to do in the next 20 or 25 minutes, and then we'll open it up and you can type in questions and we can have a little broader discussion on any particular questions. So in the next 25 minutes or so, we're going to talk about the role of SBA. Everybody's focused on PPP, and I'll cover that first to get it out of the way. But we're going to talk about the role of SBA right now, things happening in SBA that probably will make it a lot of sense to help grow your businesses using the various SBA loans that are available right now. And the government, along with PPP, has taken some steps to make it easier to get and to incentivize businesses to take SBA loans. But let's get started with PPP because I'm sure it's on the top of everybody's mind. So as most people know, the first round of PPP started out in chaos and ended up that anybody who wanted a PPP loan and qualified was able to get it. SBA Loan Group, we've been around since 2011. We've accomplished several $1 billion of SBA loans. We did about $500 or $600 million in the first round of PPP. So we have a tremendous amount of experience within our core management group. We know how to get loans done. We know how to package them. We know how to optimize the amount that you can get from the SBA. So back to PPP. So the new round started basically today. Community banks could today start to take applications from first-time PPP borrowers. And on Wednesday, they'll be able to take applications from those who also did the loan in the first round. There's slight differences in terms of eligibility. You have to have fewer than 300 employees, though there are some exceptions to that in the hospitality industry and hotel industry. You have to show a drop in revenues versus 2019. The preferred way by SBA is that you're going to have to take 1 quarter of 2020 and compare it to the same quarter in 2019. And as long as you can show a 25% drop in revenues, not profits, but in revenues, that qualifies you. Or an alternative method of showing the same thing is to basically show a 25% drop in overall revenues 2020 compared to 2019. My guess is for 99% of the people on this seminar, you're going to be able to show that. Okay. The cap you can get is about $2 million. There are some exceptions to that too, but mostly for the hotel and hospitality industry. And you show, just like you did in the last loan, you show you take your 2019 total payroll, you divide it by 12, you multiply it by 2.5, and that's the amount of the loan. So if you had $1.2 million payroll, $100,000 a month average, you multiply it times 2.5, you're eligible for $250. They have changed some of the rules on how you get forgiven in terms of now you can use the money for more things. You don't have to use it just for payroll. You can do it for more things. So we have set up a much more automated way of doing those loans. And anybody who's interested in doing those loans, simply go to SBAfunding.com, press the link for PPP. It will take you right into our exclusive provider, and you can start filling out the application for that. Okay. I want to say as we bridge and leave PPP, though I will certainly entertain any questions at the end of this related to PPP, is that getting a first PPP loan 100% does not stop you from getting a second one. And getting both loans or one PPP loan absolutely does not stop you from getting a regular SBA loan. So most of the focus, rest of the focus of this discussion will really be on regular SBA. Okay, I have been, being a somewhat older person, my first cataclysm in the economic markets was 1987. So I've lived through almost every downfall in the market since 1987. This one, of course, was caused much more by a disease than the others in terms of economic cycles or anything. But the mantra, basically, of borrowing money is the same in every economic cycle. Borrow money when you do not need it, because when you need the money or desperate for the money, you either can't get it or it becomes very expensive, right? Another quote I love to use, I didn't put it up in a slide, is Albert Einstein. In chaos comes opportunity. In chaos comes opportunity. I don't think you can have more chaos than we have had in every way, in the economic sphere, in the pandemic, healthcare sphere, in the political sphere with everything going on. In chaos comes opportunity. In almost every business trend cycle, the stronger companies and the people who think ahead go ahead and their businesses get better, and the weaker players tend to get weeded out. But the markets have an equalizer. So as companies go out, market opportunity opens for the companies that basically survive and grow. And SBA is a tremendous, I guess I did put that slide up, is a tremendous opportunity to help grow your business in a very cost-effective way. Again, Albert Einstein, in the middle of difficulty lies opportunity. So the premise here is how to use SBA in three sort of segments that I think everybody who manages a business always needs to be considering on an ongoing basis. How to protect your business, how to grow your business, and how to build long-term equity in your business, okay? And SBA helps you with all three, okay? If you woke up on January 1, 2020, and you said to yourself, what can go wrong this year? What can go wrong this year? It wouldn't have been, I think we'll have a pandemic and the economy will drop and we'll have 30% unemployment, 17% unemployment, will be closed for 5 months. I don't think anyone would have thought of that. I certainly didn't think of that, okay? If anything, that shows the importance of always protecting your business. And how do you protect your business? The typical way to protect your business is basically with cash. So you should always have in the bank, if you ask me, 6 months of your operating expenses. You should always be prepared for the worst, okay? So typically, how do you get money? The typical business paradigm, for most businesses, is bank debt. You go to your banker, you've had a relationship with him for 20 years, 10 years, he loans you money. You can go to venture equity, you can take on debt, you can go to outside partners, you can go to public partners. But in times of chaos, a lot of those windows are shut. So the normal paradigm really doesn't work in these tough times. It's very hard right now to borrow conventional loans during an economic turmoil. So what banks typically do is they circle their wagons. So when things are great, they give out money. Remember that first maxim? Banks give money when you don't need it. They don't want to give it when you do need it. They make it a lot tougher to get. They make it a lot more expensive to get. And that leads to say, what are alternatives? Well, SBA, for reasons I'll get into in a moment, is a perfect alternative because the banks are protected in SBA. And we'll talk about why in a minute, okay? So the issues today with bank financing, just to summarize, are banks are very reluctant to do conventional loans. They're basically doing much smaller conventional loans than they did a year and a half ago. They're only doing it to much higher criteria in terms of types of companies they're loaning money to. They dramatically increased their credit criteria. They're putting in many more loan covenants. They're definitely making it a lot harder to get loans in general. As a result, banks will only finance their stellar performers, okay, which most of us are not their stellar performers. Usually they'll lend less than your financials can support. They'll impose a lot of conditions, and many times, if you've ever read your loan covenants in a typical loan, they can call the loan for any reason whatsoever, okay? And typically, you see a lot of recalls of loans. And I know from talking to hundreds of companies on a monthly basis through our company, a lot of existing loans where they didn't miss any payments for years, the banks are getting nervous. They're getting nervous about the industry sector. They're getting nervous about the debt ratios that a particular company might have. And they're starting to call loans and making it harder to really get money and to keep the loans that you have. So that leads to what we think is a great solution for your long-term financing needs, which is SBA. So what is an SBA loan? Okay, let's take 2 minutes and just go over what that is. So the U.S. Small Business Administration, which is an arm of the federal government, okay, set up in 1953 by then President Eisenhower, to promote small business. In 1963, they started what was called the Guarantee Loan Program for banks. So what they do is they go to commercial banks and they say, we want you to loan to small businesses. Well, banks don't want to. So we're going to induce you to loan to small businesses. How? By giving you a guarantee. So 75% typically of the loan is guaranteed by the U.S. government. If a bank registers with SBA, follows the 400 pages of regulations that SBA has, basically, they will give the bank a 75% guarantee. So that induces banks to loan money. Well, I'll tell you right now, starting January 1, as part of the whole economic package, for the rest of this year, banks are now getting 90% guarantees. So suddenly, the bank is only risking 10%. Okay, that was one of the inducements in the bailout program that hasn't been really publicized because everyone's focused on PPP. So suddenly, banks are interested in making SBA loans. They always were at 75%. Now they're more interested at 90%. A small business, by the way, is defined as any business. Now, there are some caveats to this because there are 20 pages of rules, but roughly, if you make less than $5 million a year in profit, $5 million a year in profit per year, usually it's averaged over 2 years, you are considered a small business and you're eligible for these loans. You'd have to talk to us about eligibility to make sure you're eligible, but basically any business in America making less than $5 million a year after tax profit is basically eligible for an SBA loan. Banks feel much more protected, and that's critical in this environment of uncertainty. How do you qualify? Okay. Basically, SBA separates, like separating the ocean, into two halves. What they call character, which is fundamentally anybody who owns more than 20% of the business, because in SBA loans, you do have to sign a personal guarantee. So anybody who owns more than 20%, they look at your credit score, your credit history. If you've had a bankruptcy, it's very difficult to get an SBA loan. If you've ever defaulted on a government loan, if you've ever defaulted on your student loans, very difficult, almost impossible to get an SBA loan. If you have any criminal history, you just have to disclose it. And also, if you ever had a drunk while driving conviction, which many people have had in their younger years, not me, I got away with it. Basically, you can get an SBA loan, but there are certain eligibility requirements that they call character. Okay, there are also certain ineligible industries, and virtually every industry is allowed in, except gambling industry, adult industry, passive income industries, and drug industry. So like marijuana industry right now, which doesn't apply. I don't think that anyone on this seminar are not yet allowed, because they're allowed in some states it's legal, but not on the federal government. And then comes ability to repay. Ability to repay is a review of a 3-year history, though we have gotten SBA loans many times with 1 year of cash flow. You have to have sufficient cash flow to repay the loan. The rough rule of thumb, okay, is for every $20,000 in a 10-year loan, and all the loans are 10 years or 25 years. 10-year loans for working capital, basically, you have to show around $20,000 of pre-tax income for every $100,000 you want to borrow. On a 25-year loan, which is for real estate, and we're going to talk about real estate, basically, it's about $7,500 of income for every $100,000 you want to borrow. Okay, and they will go off of historical earnings, and they will also look at projected earnings. A question everyone will ask, so I'll answer it right now. Are they going to count 2020 because of COVID? The answer is, as long as you've returned to profitability cash flow now, okay, banks will understand what happened in 2020, and we can help position you to get a loan. So if your income has gone down from 19 to 20, that's expected, as long as we can explain it as being due to COVID, and as long as you're showing evidence that you're coming back to your former profitability, they're focused on trying to do those loans. So you can borrow between $200,000. You actually can borrow less, but our company starts at $200,000 up to $14 million, basically, okay? And that's for real estate only. But basically, up to $5 million for working capital loans and up to $14 million in various programs for real estate loans. Yearly interest, this slide it really changes every day. It's 2.75 over prime. Prime right now is about 3. So the highest interest rate that can be charged right now is 5.75. It does go up and down based on interest rates. Interest rates are probably going to be low for the next few years, so this is a perfect time. In normal working capital loans, there are no prepayment penalties, so you can pay it back anytime you want. And here's the beauty of an SBA loan. This is what I, as a businessman myself, personally loves about SBA loans. They can only be canceled for non-payment. That means no covenants, no 300 pages of boilerplate or 50 pages of boilerplate written in script that nobody could read without a microscope, where they could call the loan for any reason. In SBA, you can only be canceled if you don't make your payments. So you can be unprofitable for a year, because sometimes businesses are, by decision to do that, to grow their business, right? And as long as you're making your payments, you cannot cancel an SBA loan. Okay, so now let's go back, knowing a little bit of the basics of what an SBA loan is. How do you use them to protect, grow, and build your business? Protect. Obviously, think ahead. Remember the mantra that it's tough to get money when you need it. 6 months of working capital minimum. And I say, always have extra cash around for opportunities. One of your competitors might be in extremis because of what happened. You can get a huge opportunity to buy them cheap, or buy some of their business, or buy some of their equipment, or buy their leaseholds. You want to be ready for that. You protect your business by thinking ahead, having enough working capital. So even if you don't know why you're going to use the money, I would say today is a time to look at your needs, look at how you can grow your business, and to protect your business. It's an ideal time to take a working capital loan. So how do you use SBA for growth? Okay. I mean, growth only comes in 2 ways. Growth comes from internal growth, the existing business I have now, and making it better and bigger, more profitable, or external growth, which typically is acquisitions. Internal growth, advertising, acquisitions, books of business, hires, buying competitors, hiring people that are are critical to your business and maybe giving them a bonus to woo them away from a competitor. That sort of thing is all great ways to grow your business and great uses of SBA loans. Equity. This is the one I feel strongest about. Having been around in business, I'd say for 45 years or more, the critical number one mistake I made was not buying real estate. SBA has a very particular program for owner-occupied real estate, okay? And that program is a great way to build equity in your business. So as long as you basically use 50% of the space, you can rent out the rest. You just have to use 50% of the space for your own business. 100% based on your cash flow, 100% financing is available. That means you can buy a building with no money down. And then in terms of looking at your cash flow, if you're going to move out of your old place, you can add the rent that you were paying back into your cash flow to see if you can support the building. Okay? Must occupy 50%. A great advantage is when you're buying a building, the building itself serves as most of your collateral. Okay? And you can get additional working capital as long as it's less than 50% of the total loan. 50% of the loan has to be used for buying the building, but 40%, 45% can be additional working capital, and the whole loan is amortized over 25 years. That means, and as I mentioned earlier, as a rough rule of thumb, $7,500 of pre-tax earnings supports $100,000 25-year loan. So basically, if you multiply that by 10, every $75,000 of pre-tax profit, adding back your rent, supports $1 million of real estate purchase. So real estate is a fantastic way to build a small business. It has to be real estate for your business. You have to occupy 50% of it, but it is a great way to grow your business. Okay, now let's talk about what I started to talk about. Besides PPP, not only are they inducing banks to make loans by giving them a higher percent guarantee, as I mentioned, this first line is really interesting. Anybody who gets an SBA loan between now and September 30th, 2021, up to $9,000 a month, your payments will be paid by the U.S. government. Your interest will be paid. Your principal will be paid, okay? So if you got $1 million loan, let's say, in a 10-year loan, your payments are probably about $13,000 a month. The first $9,000 is paid for 6 months. If you get a $500,000 loan, 100% of your payment is paid for 6 months, okay? That is a great inducement. On a 10-year loan, that lowers the loan by 5% right there, the cost of the loan, because it's being paid for by the U.S. government, okay? And the other thing they're waiving is what they call the SBA guarantee fee. The SBA guarantee fee is about 2.5% of the total loan. That's about $25,000 per million borrowed. So if you borrow $500,000, it's $12,000. That's a saved fee. So SBA is inducing banks and trying to give incentives to businesses. And why do they do this? They do this because of what I call the multiplier effect. You know, every time you put about $100,000 into the economy, so we loan you $100,000, that has a ripple effect of about 9 to 1. So $100,000 creates almost $1 million of activity because you take the money, you give it to your employees, you give it to the advertising agency, they take the money, they buy things with it, they grow their businesses with it. So it's like a 10 to 1 factor. So one of the great ways to work ourselves out of recessions is through putting more money into the economy. And that's really the whole concept of the bailout program too. Besides giving money to people so those unemployed, unfortunately, can have enough money to live, it's also to put money into the economy to stimulate economic growth. And my final quote, because you know I just love quotes and can't give them up, is prior proper planning prevents poor performance. Think ahead. Prior proper planning prevents poor performance, and think ahead. Now is an ideal time, okay? SBAfunding.com is our email, and I'm sure we have a slide here that shows our phone number, okay? So in a few minutes, I'm just going to wrap up, and then we're going to open this up for questions. You can write your questions in, and Jamie will give them to us, and we can have a discussion on anything in particular. So just to summarize, PPP is open. We're extremely happy to help you get a PPP loan if you want it. Just go to sbafunding.com and press the link for PPP, and you're on your way. You can fill out the application. Everything can be uploaded. We think this program is going to go pretty smoothly versus the last time. And especially for regular SBA loans, feel free to contact us. In a 10-minute discussion, we can tell you what you're eligible for. And this is an ideal time. Jamie, thank you. And thank you to your series for allowing us to speak today.
Thank you, Steve. And I want to thank all of our attendees today. And as Steve mentioned, you can obviously type your questions into the chat box if you haven't already done it throughout the presentation, or if it hasn't been answered, we will get to it. Also, feel free to email Steve. And for most of you who are on the line today, you can always email me directly. You probably have my email, but it's jamie@medresultsnetwork.com. You can find us there, and we will be happy to help you out or connect you to Steve in the SBA Loan Group whenever it's convenient for you. So thank you again, Steve. We appreciate your time today. And again, we look forward to speaking with you all, and I'd welcome you to join us on our next MedResults educational webinar session. Thank you again.
Thanks.
Bye-bye.
Bye.